Well, March can't end soon enough for technology investors. That sector is one of the worst performers in the S&P 500 this month. Take out Apple and its performance is even worse. Josh Lipton takes a look at what's pressuring tech.
The tech sector of the S&P 500 is down about 3% so far this month. For the quarter, it's basically flat. In fact, this would be its smallest gain since at least 2005. So what's pressuring tech? Strategists blame a rising dollar. As a sector, tech generates nearly 60% of its sales from overseas. That's more than any other sector in the index. A stronger dollar can impact sales by making the price of U.S. products more expensive to customers overseas. And strategists only see the dollar moving higher from here.
Because of the U.S. economy is growing, because corporate earnings are appreciating, because the yield on our 10-year note is superior to that, to other yields around the globe, that it just acts sort of as a magnet to international investors bringing their monies to the U.S., and that helps to strengthen the U.S. dollar.
A stronger dollar could prove a substantial headwind for some tech companies, according to analysts at Nomura. For example, they point out that Oracle took a 6% hit to revenues because of a stronger dollar in its most recent quarter. They estimate a 9% impact in its May quarter. Of course, tech still has its fans. They point to expected earnings growth and attractive valuation.
Earnings are expected to rise in 2015 at a 5% clip versus the 0.4% pace expected for the S&P 500. Also, the price-to-earnings ratio is less for technology at 16.2 versus more than 17 for the S&P 500.
Tech investors might have a better sense of where the dollar heads from here on Friday morning when the jobs report hits. Dollar bulls say that report, if it's strong enough, could provide more fuel for a rising dollar. For Nightly Business Report, I'm Josh Lipton in Silicon Valley.